Hello and welcome to The Chart Show. I'm Victoria Scholar, and each week I'm sharing my analysis on three key stories that are getting a lot of interest among investors, breaking them down not just from the fundamental perspective, but with technical analysis on the charts as well. This week's three charts are HSBC, oil, and gold. Shares in HSBC closed Tuesday's trade slightly higher after profits more than doubled in 2021 thanks to an improving economic backdrop. Pre-tax profit hit $18.9 billion, improving versus the $8.8 billion the previous year, but it was slightly below expectations, driven by the release of credit impairments as expected. It also announced a $2 billion share buyback program at the third quarter and is now following that up with a further $1 billion share buyback. With the initial scheme is completed, that will be taken up. Plus, it saw an increase to the dividend, creating a projected yield of 3.3%, below its pre-pandemic highs of 8%, but still an improvement from the COVID era. The bank made particular progress in Asia with focus on its wealth management business in China. On balance, the market consensus remains positive, with shares coming in at a cautious buy from the analyst community. Let's take a look now at the chart of HSBC because the stock has enjoyed strong gains since the trough in September. The inflationary environment, prompting higher interest rates from the Bank of England, is providing a tailwind for financials, with HSBC enjoying a strong uptrend. The stock has rallied by more than 50%, even after retreating from the February peak. It looks as though the next major resistance level to watch is at around 566, the 2022 high, with a break above potentially setting the stage for further gains. Meanwhile, there's near-term support at 525 and 500 below that, with a break through that potentially marking the beginning of a new sideways or even downtrend. Oil hit fresh 2014 highs on Tuesday, spurred by geopolitical tensions after Russia ordered troops into two breakaway regions of eastern Ukraine, and the West responded with a series of sanctions. Putin continues his laser focus on trying to get Ukraine to renounce its NATO membership ambitions and has by no means ruled out the use of force in Donbass. Oil came close to $100 a barrel before pulling back from session highs. The last time oil broke above $100 was back in 2014, with analysts increasingly now calling for higher oil prices ahead. Even before the geopolitical tensions between Russia and Ukraine came about, prices were already moving higher, underpinned by strong demand after COVID and limited supply from OPEC+. Let's take a look now at the chart of Brent Crude because it's been staging an impressive uptrend, rallying by around 40% since December alone, when it was trading below $70 a barrel, and it's now inching closer to $100. In January, it surpassed the previous peak from October at around $86, paving the way for an extension of the uptrend. If Brent can break above psychological round number resistance at 100, that penetration could prompt further bullish price action ahead, more buying and an extension of the uptrend. Looking on this long-term monthly chart, we can see that above 100, the next major resistance hurdle is all the way up at 112.25, the peak from 2014, just before the start of a period of heavy selling over 2 years. Meanwhile, near term, look for support at 95 and below that at 90. As stock markets come under pressure amid the geopolitical uncertainty between Russia and Ukraine, with fears of an invasion, investors have been hunting for a safe place to store their wealth. We've seen the global market sell-off spur demand for safe haven assets like gold, silver, and the Japanese yen. And the likelihood is that these assets should remain largely in favour among investors for as long as the market jitters and the geopolitical tensions remain. Taking a look at the chart of gold, we can see that it was enjoying a strong uptrend for most of the fourth quarter last year, but gains have accelerated this year sharply amid the risk-off sentiment. Gold has broken above key resistance at $1,900 an ounce and is closing in on breaching the high from June last year. If it can push above this level at around 1916, that could set the stage for further gains, particularly if equities remain unsettled. However, given the rapid acceleration in gains, there could be some potential consolidation ahead of a potential move higher. On the downside, beyond 1900, there is key support at 1877. That was the peak from November on an intraday chart.